Hello and welcome to Change India, experiments with big ideas, where we discuss radical policy ideas with transformational potential. Today in the second show of our four-part series, we are going to discuss the idea of setting up a $1 trillion sovereign wealth fund without spending a rupee of government money.
In a country with close to 300 public sector undertakings, only 2 feature among India's top 10 companies by their market capitalization. Nearly 30% of central public service enterprises are sick or non-functional. In 2013 to 14, the government's disinvestment program too was a failure, having raised only 3% of the 40,000 crore rupee target through disinvestment of public undertakings. With the government refusing to give up its iron grip on poorly performing PSUs, we are suggesting a middle path. Our big idea is to set up a $1 trillion sovereign wealth fund created out of the shareholding of public sector undertakings to put India back on the path of high growth and development.
So how can we achieve this? 1. Set up a government-owned but professionally managed fund to which the government will transfer all its shareholdings in public sector companies. 2. The fund will create value in PSUs by enforcing better standards of governance. 3. This fund will be listed in New York and London to raise up to $1 trillion in a mix of debt and equity over the next 6 to 8 years. 4. The government will retain 51% plus of this fund, thereby keeping all public sector companies under government ownership until and if our parliament is ever ready for large-scale privatization. To debate this idea, we have on a satellite link from Bangalore, Mohandas Pai, chairman of the Manipal Group of Institutions, who was a former board member of Infosys. And joining us on another satellite link from Delhi is Madhav Dar, a former Wall Street whiz who is now the managing partner of GTI Capital. With them is Dheeraj Nair, CEO of Network 18's Think India Foundation. Madhav, you've been on Wall Street. Tell us, is it a workable idea?
No, listen, I think it's a terrific idea. Very few things are pro-growth, anti-inflation, anti-corruption, and pro-efficiency. And especially for a twin deficit country like ours, this has multiple positives for it. So I think all in all, it's a terrific idea. Like everything else in India, it'll be the politics of the implementation and the formulation of this that'll matter. And you know, at the risk of being facetious, I mean, what's wrong with this idea is that there's nothing wrong with it.
So quickly, where do you think, if it's likely to get tripped in sort of popular debate, where do you think it's likely to get tripped? On what point?
Well, I think there'll be a couple of points, obviously. One is that, I mean, this obviously smells like disinvestment. And again, as we know, in India, you can't even say privatization, let alone disinvestment. So it'll have to be, I mean, what is nice about the idea is that it's reform by stealth. And in India, that's the only way reforms can work. And somebody has to give up control. And in this case, it will be the individual ministries that are responsible for the various public sector assets.
Right.
So that's where the resistance will come from. You are, in effect, abdicating some or entire responsibility to a quote-unquote professional group that's going to oversee, pick a number, somewhere between $250 billion to $1 trillion of Indian sovereign assets.
Right.
That is huge power, huge responsibility that somebody has to abdicate, which is never easy.
Mohandas, you know, the 2 or 3 problems that we've had with our disinvestment program, you know, whenever we announce it, the price sort of drops, people start worrying about will it take away control from the government, and ministries start fighting. Now, all these problems can be addressed through this single sovereign fund idea. So, your assessment and your reaction to what you heard from Madhav?
No, I think it's an idea worth considering. It will have many benefits. It will make sure the ministries focus on policy making and don't dabble in business. They're not good in running business. Second, like you said, Raghav, when they disinvest, it goes to a tortuous process, and by the time they come to the market is not ready, the market is tanked or whatever it is, and the leakage of information about the entire process. We have seen this, that prices fall whenever the government comes. It will do away with this because this will be in a sort of a permanent fund which will be available. And the third thing which gives me some hope, Madhav, for this great idea is the ETF which has already been listed right now, right? I mean, Goldman Sachs did this ETF along with the Ministry of Finance, where they put some stocks into an ETF and they sold it and realized money. And a large sovereign fund like this, which is able to monetize at a time of its choosing to give support to the exchequer or whatever it is in a non-combative manner with good timing, enhancing value is wonderful.
Okay, so we'll come to the nuances, but let me bring in Dheeraj. So, Mohandas picked up a nice one. The government, in a very, very tiny way, through this ETF, has already started doing this, but it's a very tiny, it's a very, I wouldn't even call it a half measure, it's virtually a no measure. So why don't we look at it in a much bigger way?
Yeah, I think the problem, as Madhav correctly pointed out, is political. For example, disinvestment is a uniquely Indian phrase. I mean, what does disinvestment mean? Yes. It's actually investment. I mean, you're getting fresh investment into public sector companies. And privatization, of course, is a word which is not mentioned because the moment you mention it, Parliament is up in arms. So there are several problems with the whole disinvestment, privatization, letting go of control. But there's no reason why this cannot be done, because we are actually saying the government can retain control.
Right.
Now, the only problem here is, of course, as Madhav pointed out, the individual ministries may lose control, so they may resist. But this is where a strong prime minister comes in again. Right. So it's government control, but it will not be a ministry control. It will be controlled by a professional board on behalf of the government. Right. So this can be done because it's an intermediate step between full privatization or disinvestment and letting them be as they are. Right. So this will improve governance while the government can retain control over their strategic assets.
Right. Madhav, we've seen China has done something like this, where they transferred all their bank holdings into China Investment Corporation and started raising money against it. In your assessment, what kind of individual tranches of sales should we look at? Should it be more debt, more equity, a mix of both? Give us now a nitty-gritty look at how this gets done.
Yeah, listen, I think we may be getting ahead of ourselves, and maybe that's part of what we should do. But as Dheeraj said, I think it's the first and a very important step, and we'll have to feel our way through. And how much money we can raise and the nature of the money will really be a function of how effective this overseeing body is. For example, if it can demonstrate several of the aspects that we expect it to demonstrate, which is making counter-cyclical and therefore very intelligent sales and purchases, whether it can actually improve governance and profitability of PSUs. If it can, then I think it's a game changer. Then it will be seen as an extremely attractive investment vehicle, and then the world is your oyster. So I think it depends really on the formulation of this, how its first year or so, how effective that is, before we can take steps going forward. Raghav, a couple of other things I would point out politically. I think also the differences between, let's say, the Chinese example, and I guess the best comparison, which would be Temasek of Singapore, is that these countries are capital-rich countries, and they have huge current account surpluses. India is a twin deficit, capital deficient country. So this is a very different kind of sovereign wealth fund. It really has to be positioned as a Indian redevelopment fund, frankly. Right. And a way to get over some of the political arguments is not that it's being quote unquote privatized or government silver is being sold to foreigners or to the retail. It has to be given as an alternative. So the government should be told, listen, you can do one of two things. You can hang on to a passive investment in Ashoka Hotel, or you can sell 49% of it and fund education.
Right.
Fund a road, fund a bridge that is required in some poor village. So it has to be shown as an alternative.
Absolutely. So really, Madhav has laid it out for us. It's a question of how this gets positioned. $250 billion to $300 billion of passive money activated for infrastructure and for poverty reduction and for several other good things that the economy needs. I'm going to take a break at this stage and go right after the break to Mohandas Pai and pick up the argument again. Stay with us. Welcome back to Change India, experiments with big ideas, and today's big idea is to set up actually leverage the existing stock of $300 billion of public sector wealth, leverage it to raise between $500 billion to $1 trillion over 6 to 8 years, don't spend a single new rupee from the government, and use that corpus to invest in social sectors, physical infrastructure and other projects which are good for our economy. Mohandas Pai, you heard just before the break Madhav lay it out on how this can be done. And while $1 trillion or $500 billion can be a 6 to 8 year perspective, the sense is start small, maybe look at the first tranche, see how these companies can be sort of restructured, and then as the fund grows in value, you can use more debt, more equity. How would you do this? Implementation steps from you.
Well, Raghav, the first thing I'll do is I'll tell the people of India why it is important for the future and tell them that if we can invest 100,000 crores in social programs and in job creation, it will do wonders for the youth of this country, because we're all concerned about the young people and the jobs. For example, to create jobs, let us say that 30,000 crores will be spent on the railways and 20,000 crores will be spent on the road network all across India using money from this. And the balance 50,000 crores which we may hope to realize from this fund, 30,000 crores will go for a national scholarship program, so that every young person who wants to goes to college gets a scholarship, and that will be 30,000 crores a year, and 20,000 crores for a national health scheme to give health insurance to every Indian. Now just imagine, through this fund we solved 3 big problems. One is the problem of infrastructure investment, where you create jobs. Other is the problem of education, where we need to educate many more young people. And the third is about health for all Indians, excluding people who can afford to pay. Now if we position this as an outcome-based thing for which we need to do this in a very significant different manner, by leveraging value and getting value of an asset which is not being realized, which is giving a measly yield as dividend, I think it is something that can be saleable. Because what people of this country want is, what are you going to do with this great asset the government has built up with taxpayers' money? And we have to have a clear message. The end use is 1, 2, 3. I think that's the first thing to be done. And the second thing to be done is to start small and start with an experiment, taking some good companies and putting it into a fund, maybe selling it to Indian stockholders as well as to the overseas stockholders, and expanding it over a period of time and using the proceeds for good programs. I think if we're able to do these 2 things, it can kickstart.
Okay, Dheeraj. Now, Mohandas Pai has really laid out the kind of projects you can do. I would add to this some big PPP projects, which in a sense, it doesn't mean that the fund should hold on forever. Let's take the Delhi airport privatization, for instance. You've got a government stake there. This fund could fund several other such airports. And then that equity could be sold and come back to the fund. So it becomes a virtuous cycle, doesn't it?
Absolutely. And I think one of the suggestions which came up in our earlier Change India series was that the government should incur the capital expenditure on big projects, PPP projects, and then hand it over, sell it to a private sector enterprise to run it once the returns are clear.
Right.
So this fund can do that. It can actually create the put in the initial investment, and then it can sell it for a good return later. So I mean, this fund would be ideally positioned, and if it's manned by professionals, they'll make the right choices.
Right.
Not under political pressure that you fund cronies and so on,
right,
but you actually fund productive assets. And this is one way to actually meet India's huge government expenditure requirements,
right,
without busting the fisc.
Right.
Because we all know what the fiscal deficit position is, and we
right,
all know what it's going to be for the next 3 or 4 years. We're going to have to cut expenditure rather than raise it. And this is one very easy way, non-contentious way. We're not talking about full privatization or anything. Non-contentious way to spend on the things we need, as Mr. Mohandas Pai said.
In fact, just a quick clarification there, because someone who's watching this program would turn around and say, listen, if you're talking about 100,000 crores of investment, as Mohandas Pai laid it out, we do that from the budget every year in any case. So what is different about this?
No, well, this is not from the budget, right? This is from, you're setting up a fund which will actually raise even more money based on the fact that it can turn around PSUs and turn around. Right now, there are very few PSUs which actually contribute to the government coffers.
Right.
And not all of them are doing it in a good cause. Like Coal India, for example, is doing it because it's a monopoly.
Right.
Others are draining the government of money, like Air India, for example. So this way, none of those will be a burden on the fisc, on the finance ministry. They will be transferred to this particular board. And who knows, even Air India could be turned around by a professionally managed wealth fund.
Right. Yes, Mohandas, you were going to say something.
Raghav, today, for example, you're getting some 15,000 crores in disinvestment, and may get some 30,000 crores as dividend, maybe 35,000 crores, 40,000 crores are coming. We're talking about 100,000 crores. And it means the fiscal deficit will come down, the government financing will improve, interest rates will come down, and if interest rates come down because government is borrowing less, it means the whole economy gets a bump up in a non-intrusive manner, in a non-inflationary manner, by taking money from investors for long-term growth, and I think it's fantastic. So you just have to manage this very well. The equation, the algorithm is very clear.
Right. Madhav, quickly, there is, again, I'll come to a little bit of a nitty-gritty point with you. Should the government put all its banking companies and non-banking companies into one fund, or perhaps look at two different funds, one for the banking companies and one for non-banking companies, since the nature of these companies is very different? And can the money also be used to recapitalize banks, because that's one big challenge before the government? They've got to put in lakhs of crores to recapitalize banks. Could this fund step in and do that for them?
Yeah, I think that will have to be looked a little carefully. I think you could make it banking and non-banking, just because the supervisory bodies are different, and some of the complexities are unique to private sector banks. So I think that could be looked into. I would say that I would be more in favor of a large portfolio of government companies, not really doing this Navratna business where the companies that go are actually quote-unquote good companies. I mean, that creates a selection bias, and frankly, one of the great benefits of having a fund like this is that undermanaged companies, underknown companies that come into the professional ambit of this fund actually will get a bump up, both in visibility and most likely in governance, and in profits, and therefore eventually in valuations. So that is one important benefit. The other important benefit is the pooling of resources. Right now you have several private sector enterprises with huge cash surpluses, massive cash surpluses, and they don't know what to do with them.
Right.
They can't reinvest them, they don't go to the government. The benefit is the pooling of those assets, that those assets can then be combined, help pay down the government's deficit and or fund infrastructure.
Right.
So there's a pooling of resources with a common national interest that is professionally administered. So I think those are huge multiplier effects
Right.
and benefits of this structure.
Dheeraj, you've heard both the experts talking. One quick question on implementation. I've been thinking, should this be with the Finance Ministry or should this be with the Prime Minister's office? My gut told me Prime Minister's office because it got too many ministries involved in it.
No, I think it should be with the Prime Minister's office. I mean, this is again something which needs someone to bang heads together, someone to get rid of the turf wars that constantly occupy the ministers in government. So while Finance Ministry could be an option, and certainly will be an option which can be considered, because Finance Ministry at the end of the day does control other ministries because it gives the funds.
Right.
So it has some leverage, but it would be better if the Prime Minister directly monitors this fund and the board directly reports to Parliament rather than to the Prime Minister alone. So I think it's very doable, and let's just the one point I want to make is that the Sovereign Wealth Fund often gets confused with a fund with foreign exchange reserve. We are not talking about a fund with foreign exchange reserves. We are talking about funds with public sector wealth of this country. And as Madhav said, it's very important. They can rescue Air India. I'm telling you, Raghav, the Civil Aviation Ministry will never be able to do it.
But this
fund possibly could.
But
And nobody would buy Air India in its current state, but this fund could make it fit to be sold.
All right. So we've come to the end of this very, very productive discussion. I just want to reiterate a point that Dheeraj made before we go in. When you speak sovereign wealth fund, a lot of people are against that terminology because they believe that being a current account deficit country, we will be spending our scarce foreign exchange reserves in setting this up. This is not what this idea says. This idea is in fact exactly the opposite. This says the government doesn't have to spend a single penny from its fiscal accounts. It just needs to leverage existing public sector wealth that the country has created over the last several decades. Thank you very much to all my guests for joining in today. Keep watching.